Namaste, my dear friends. Now I am referring to you Super 60 problems and solutions. 60 questions I have selected from our paper number 7, Indirect Taxation Section B, CMA Inter. Chapter wise, important questions have been selected, and those problems I am now going to work out in a simplified manner. You also join with me to work out the problems. As a result, you can build up very good confident level to get center marks in the examination. Let's start now the first goods and services tax. Thereafter, we'll take up customs law to cover the 50 marks of our GST and customs applicable for the exam of CMA Inter is as follows. Referring to you now, question number 1. A makes intrastate supply of goods valued at rupees 50,000 to B within the state of Karnataka. B makes interstate supply to X Limited located in Telangana after adding 10% of its profit margin. Thereafter, X Limited sells it to Y in Telangana intrastate supply after adding 10% as his margin. Assume that the rate of GST chargeable is 18%, namely IGST 18%, CGST, SGST 9% each. Calculate the tax payable at each stage of the transactions detailed above. Wherever input tax credit is available and can be utilized, calculate the net tax payable in cash. At each stage of the transaction, indicate which government will receive the tax paid and to what extent. An excellent problem it is. A sold the goods to B at what value? For 50,000. Intrastate supply CGST 9%, SGST 9%, namely 4,500 CGST, 4,500 SGST. CGST revenue of the central government, SGST revenue of the state government of Kerala. State of Kerala. So in this given case, if we refer the first transaction, we got it. The revenues of the respective government when the goods sold A to B. Now further, B from Karnataka, X Limited is from Telangana. So B sold the goods to X Limited, which is interstate supply. If it is interstate supply, IGST will apply. What is the cost of purchase to Mr. B? First of all, when the goods purchased by B from A, by payment of GST, which he availed the input tax credit. Therefore, the GST is not a form part of the cost. The cost only rupees 50,000 for Mr. B. On 50,000, 10%, namely 5,000. Adding his profit margin, selling to X Limited at rupees 55,000. On 55,000 at the rate of IGST, namely 18%, which is equal to 9,900. Mr. B liable to pay IGST. IGST levied by central government, administered by central government, but IGST not the revenue of the central government of India. As you are aware of that, it should be apportioned between state and the central, where the goods or services are got consumed. That time the IGST will be apportioned between the central and state. So in the case of B sold the goods from Karnataka to X Limited of Telangana, B liable to pay IGST 9,900 on rupees 55,000. While paying the 9,900, he will deduct the CGST 4,500, SGST 4,500, already what he paid when he purchased the goods from A. After that, he will pay net amount to the department through electronic cash ledger, IGST. How much is paying? Only rupees 900. But IGST not the revenue of the central government of India. Further, X Limited when sold the goods to Y Limited within the state of Telangana, intrastate supply, and Y Limited is Mr. Y is the ultimate end user, the goods got consumed in the state of Telangana. Therefore, in the given case, when X Limited sold the goods to Y within the Telangana, by adding the profit margin of 10% on his cost, what is the cost of purchases to X Limited when he purchased by paying 55,000 towards the value of the goods plus GST 9,900. So GST qualify for ITC for X Limited should not form part of the cost. Therefore, what is the cost? 55,000 to X Limited. When he adding 10% on 55,000, namely 5,500, selling to Y, selling at rupees 60,500. So on that value, on that 60,500, at the rate of CGST 9%, SGST 9%, namely 5,445 and 5,445 CGST and SGST is the revenues of the respective central as well as the state of Telangana. But he will deduct the IGST what he already paid earlier and paying through electronic cash ledger 495 to CGST account, 495 SGST account. But IGST already is there in the hands of Central Government of India. That is going to apportion between the central and the state of Telangana. That once apportioned, then finally the revenue to the Telangana state government in the name of SGST 5,445 is the revenue to the state of Telangana. Equal revenue is going to go to the central government in the name of CGST 5,445. Got the clarity, my dear friends? As simple as this. Now referring to you, question number 2. The question has so many subparts. Don't worry, very simple, easy one. It belongs to supply, scope of supply, composite supply, mixed supply. Very easy to handle. Lengthy one because it consists of so many parts. Very simple. Reading as follows. Mrs. Kajal, a registered supplier of Jaipur, Rajasthan, has made the following supplies in the month of January. First point number 1 here, referring here as follows. Supply of laptop bag along with laptop to a customer of Mumbai for 55,000 exclusive of GST. Now, as you are aware of that, laptop as well as laptop bag together supplied composite supply. The principal supply is the laptop. The GST applicable for the laptop will apply for the entire supply of rupees 55,000. Further, point number 2, supply of 10,000 kits at rupees 50 amounting to 5 lakhs exclusive of GST to Ram Fancy store in Kota, Rajasthan. Each kit consists of 1 hair oil, 1 beauty soap and 1 hair comb. Like that supplied is called as a mixed supply. The entire 5 lakh rupees, the entire rupees 5 lakhs will apply the GST where among the supplies which attract highest rate of GST. Simple. Point number 3 I am referring here. 100 kits are given as free gift to Jaipur customer on the occasion of Kajal's birthday. Each kit consists of 1 hair oil and 1 beauty soap. Cost of each kit is 35 rupees, but the open market value of such kit of goods and of goods of like kind and quality is not available. Input tax credit has not been taken on the goods contained in the kit. Sir, I supplied freely and on that asset, input tax credit has not been availed. Therefore, it is no consideration, not covered under the Schedule 1. As a result, the point number 3, I can simplify manner to say that here there is no GST. No GST. Why no GST? No consideration and not covered under the Schedule 1. Further, my friends, referring to point number 4, event management services provided free of cost to her brother for his son's marriage function in Indore, Madhya Pradesh. Cost of providing such services is rupees 80,000. But the open market value of such services and of service of like kind and quality is not available. Namely, to speak here, the taxpayer Kajal is our client who supplied services freely to her brother. When it is fall under the schedule 1 as a related person, means only when her brother is wholly or mainly depending on her. In the given case, such a relationship has not been established. Simply, the problem says Kausal is a taxpayer. She supplies freely to her brother, not related persons, unless until problem clearly says her brother is depending on her. In that case only related parties, in that case freely supplied services will cover under the schedule 1 if there is no consideration, but covered in schedule 1 is a supply called deemed supply. But in the given problem, there is no deemed supply, no consideration, not covered under the schedule 1. Why not covered schedule 1? You know, my dear friends, because the relationship between the Kausal and her brother is not established as the family. Only when the brothers, sisters are wholly, mainly depending on such person only related parties. Otherwise, no. Therefore, such a point not given. Here, they are not related parties. Therefore, no GST. Even in the case of point number 4. Here, no GST. Further, point number 5. 1400 chairs and 100 coolers held out to Function Garden, Ajmer, Rajasthan for 3,30,000 exclusive of the GST, including the cost of transporting the chairs and coolers from Mrs. Kauzal's godown at Jaipur to the Function Garden, Ajmer. It is simple to say supply of hiring of chairs as well as coolers, hiring services as well as transportation of goods services. Both are combined. Composite supply, principal supply is hiring charges. The GST applicable for the hiring charges will apply for the entire supply of 3,30,000. Further, my dear friends, here referring to you, Mrs. Kausal has paid the cost of transportation of chairs and coolers to an unregistered goods transport agency located in the state of Rajasthan at the rate of 20 rupees exclusive of the GST for each chair and each cooler, and in turn has charged rupees 20 only for each chair and each cooler from the Function Garden for transportation of the same. In the given case, my dear friends, there are 20 rupees per chair for transportation. How many chairs and coolers? 1,400 plus 100, totally 1,500. In that case, how much comes here? Which is rupees 30,000 rupees. 30,000 rupees, nothing but what? GTA services, where it is applied what? RCM. The GST liable to pay by Kausal because she is a recipient of GTA services, goods transport agent services from unregistered person. Therefore, recipient being a Kausal registered person liable to pay GST, the rate applicable for the GTA services on which under RCM Kausal is liable to pay GST on rupees 30,000. Got the clarity, my dear friends? Further, interest 6,400 inclusive of GST. The point here is inclusive of GST was collected by Kausal in January from Ram Fancy Store, Kota, for the payment received with a delay of 30 days. Okay, when the payment received as interest for the supply of services, the payment is delayed, is a supply. What is supply here? 6,400. What they supply? Supply of goods, supply of services. When they supply the this particular supply to Ram Fancy. Ram Fancy they supply the goods. See on the above. Ram Fancy they supply the goods. Ram Fancy supply the goods, which is nothing but what we said here is a mixed supply. So what rate is applicable for the mixed supply at highest rate among the supplies? That rate will apply for this particular 6,400, which is inclusive of GST. Therefore, you have to apply the 6,400 into GST divided by 100 plus GST, the GST rate applicable for the mixed supply for the goods supplied to Ram Fancy. That rate is including the interest because the GST is inclusive in the given value of interest 6,400. So the what is the GST amount means 6,400 into the GST applicable highest rate for the among the supplies when supplied to Ram Fancy divided by 100 plus GST. Then you will get the GST values. Further referring here in our serial order, question number 3. From the composition scheme, Mr. Ritesh of Assam provides the following information for the preceding financial year 22-23. You are required to find out the aggregate turnover for the purpose of eligibility of composition levy scheme and determine whether he is eligible for composition levy scheme or not for the financial year 23-24. Value of taxable outward supplies out of above 10 lakhs was in the course of interstate transaction, total 75 lakhs. Value of exempted supplies, which includes 30 lakh received as interest on loans and advances, total 70 lakhs. Value of inward supplies on which he is liable to pay tax under the reverse charge, 15 lakhs. Value of exports, 7 lakhs. All the amounts are exclusive of GST. Further, he assumed that in financial year 22-23, sorry, here some error. This is not the right sentence. Here in the financial year 23-24, no interstate supply will be executed by him. So now reading the sentence. Further, he assumed that in the financial year 23-24, not the 22-23, no interstate supply will be executed by him. Very good, goodbye. Then if the turnover of the previous year not exceeded the threshold limit, in the current year the Ritesh is eligible for composition scheme. Previous turnover for a trader, manufacturer, for a restaurant fellow should not exceed 1 crore 50 lakhs in the state of Assam also. In that case, referring here, computation of the turnover. If you refer here, the first point, value of taxable outward supplies including 10 lakhs of interstate outward supply. Total previous year only, no problem, should be added into 7 aggregate turnover of 1 crore 50 lakhs. Current year they should not make interstate outward supply. Fine, 75 lakhs we taken fully. Thereafter, value of exim supply, total 70 lakhs, in which interest end and deposit loans advances how much? 30 lakhs. That 30 lakhs should not be included in the aggregate turnover of 150 lakhs. Therefore, here 70 lakhs minus 30 lakhs, balance 40 lakhs should be added here as a exim supply should be added. Further, value of inward supplies on which he is liable to pay GST and RCM. Somebody provide the services, somebody's turnover it is, they given the supply to me, I purchase the goods, I receive the services on which I am going to pay GST and RCM. Therefore, it is not my turnover, not addable in the value of my aggregate turnover. Further, value of exports, my exports, interstate outward supply, previous year, not current year. So, in the previous year, how much I got here? Almost all, it is 122 lakhs. 122 lakhs. As aware of that, 75 plus 40 plus 7, 122 lakhs. So, aggregate turnover in the state of Assam for a composition levy, how much? 1 crore 50 lakhs. For a trader, manufacturer, restaurant fellow. Here, how much he got? 1 crore 22 lakhs only in the previous year. So, not exceeded 1 crore 50 lakhs. Therefore, in the current year, Ritesh of Assam eligible for composition scheme? Yes, provided. Hey, Mr. Ritesh, you should not make interstate outward supplies in the financial year 23-24. The year which you opt in the composition scheme should not interstate outward supplies supplied. He said, I am promising, I am not going to supply interstate outward supply. Please, I am eligible to claim composition scheme. In that case, Ritesh, in the current year 23-24, you are eligible for composition scheme, and you said you are not going to make interstate outward supply. Very good. Goodbye. Go ahead. Can I have a composition scheme? Eligible for composition scheme to Mr. Ritesh in the year 23-24. Further referring question number 4. Hiralal and Sons, registered in Karnataka, has opted to avail the benefit of composition scheme. It has furnished the following details for the tax period ended on 30th June. Taxable turnover of the goods within the state 15 lakhs, exempted turnover of goods within the state 17 lakhs. Using the above information, calculate tax to be paid by the firm for the tax period ended on 30th June in the following independent cases. 1. Mrs. Hira Lal and Sons is a manufacturer. 2. Mrs. Hira Lal and Son is a trader. Very good problem it is. Composition scheme. They are asking to find out the GST liability by a composition taxpayer. Being a manufacturer, liable to pay GST. CGST, as you are aware of that. How much, my dear sir? CGST at the rate of 0.5% of CGST. At the same time, SGST at the rate of 0.5%. On what value? On the total value. How much turnover? Total turnover here is 32 lakhs. On 32 lakhs, being a manufacturer, on the total turnover, liable to pay 0.5% CGST at the rate of 0.5% on this 32 lakhs is equal to 32 lakhs multiplied by 0.5%, which is 16,000 CGST followed by SGST 0.5% on 32 lakhs is equal to 16,000. 16,000 CGST, 16,000 SGST. When you being a trader liable to pay GST, CGST at the rate of 0.5% on what? On only taxable turnover, namely only on 15 lakhs, not on the total turnover, only on the taxable turnover 15 lakh. On 15 lakh, my dear friends, at the rate of 0.5% is equal to 7,500 CGST, equal amount SGST at the rate of 0.5% is 7,500 if you are a trader. So is the way in which you can able to find out the solution in the examination question also, my dear friends. Further, referring to question number 5. Question number 5. Mr. C.A. Ram is a practicing chartered accountant in Patna, Bihar. He commenced profession on 1st April 2024 and his annual turnover intrastate of rupees 70 lakh in the financial year 24-25. Find the tax liability under composition scheme. What a great question it is. Excellent question. Answer very simple, my dear sir. As a service provider, you can opt for composition scheme. The turnover in the previous year not exceed 50 lakhs. Previous year was not existed. Therefore, zero turnover. Eligible for composition scheme in the current year. Up to 50 lakhs. Up to 50 lakhs, he is liable to pay CGST at the rate of 3%. CGST at the rate of SGST at the rate of 3%. Now the point comes into picture. Sir, in the current year only he got registered, sir. In that case, from the 1st of April till the liable for registration, namely 20 lakhs of turnover for registration, threshold limit is there, no? Till that time, he is not liable to pay any tax. Therefore, from 50 lakhs, I am deducting 20 lakhs. Balance, how much is there? 30 lakhs. 30 lakhs attract 5%, 3% CGST, SGST 3% on 30 lakhs. How much comes here? 90,000 and 90,000. On 30 lakh, the 3% equal to 90,000 CGST, 90,000 SGST under the composition scheme. Now, in the current year, his turnover how much? 70 lakhs they said. After going above 50 lakhs, still he has 20 lakhs excess turnover in the current year. In that case, he should switch over to normal scheme with immediate effect soon after crossing the 50 lakhs of turnover. On 20 lakhs, he liable to pay GST at a normal rate. But here question asking here is find the tax liability and composition scheme. Tax liability and composition scheme. CGST 3%, HGST 3%, namely 90,000 and 90,000 only. Got the clarity, my dear friends? The important point here to highlight is previous year turnover 0. In the current year, he is eligible for composition scheme. Current year only he incorporated. In the year in which he incorporated, from the 1st of April till the liable for registration, he is not liable to pay GST. Therefore, from 50 lakhs of turnover, we reduce 20 lakhs, balance 30 lakhs only we tax. Got the clarity, my dear friends? Further, 6. Question number 6. From the desk of exemptions. Sarva Sugam Charitable Trust, a trust registered under section 12AB of the Income Tax Act 1961, provides the following information relating to supply of its services for the month of January 2024. Renting of residential dwelling for use as a residence 18 lakhs. Renting of rooms for pilgrims, charge per day 1200, total is 8 lakhs. Renting of rooms for devotees, charges per day 756 lakhs. Renting of Kalyana Mandapam, charges per day 15,000, total is 12 lakhs. Renting of halls and open space, charges per day 7,500, total 10 lakh 75,000. Renting of shops for business, charges per month 9,500, total 4 lakh 75,000. Renting of shops for business, charges per month 12,000, total 7 lakh 50,000. Compute the total taxable value of supply for the month of January 2024, assuming that the above amounts are exclusive of GST. How to identify the answer for the given case? They ask only find out the total taxable value of supply. So you have to identify exempt supply and tax supply. Then identify the taxable supply total is the answer. Renting of residential dwelling, absolutely it is exempted from the payment of the GST. Renting of rooms for pilgrims, charges per day 1200, more than 1000 rupees. So per day per room more than 1000 rupees, especially supply of service made by section 12A or 12AB of the entity, where the immovable property let out for short-term accommodation by a religious place meant for general public beyond rupees 1000 per day is taxable. How much here is there? 8 lakh, total 8 lakh here is taxable, my dear friends. Further, renting of rooms for devotees, charges per day 750. 750 na is exempted. 750 means is exempt. Further, renting of Kalyana Mandapam, charges per day more than rupees 10,000 is taxable. Here it is taxable, my dear sir, because 15 rupees per day, therefore taxable. Further, renting of halls and open space, charges per day 7,500 up to rupees 10,000 per day is exempted. Therefore, it is exempted. Further, my dear sir, renting of shops for business, charges per month 9,500. Renting of shops for business per month, rent how much? 9,500, less than rupees 10,000 per month. Absolutely exempted, sir. More than 10,000 rupees per month is taxable. Renting of shops for business 12,000, more than 10,000, therefore it is taxable. So if you sum up the taxable values, one is 8 lakhs plus 12 lakhs, thereafter 7 lakh 50,000, 7 lakh 50,000 is equal to total value of taxable supply 27 lakh 50,000 is the taxable value of supply in the given case. So to 27 lakh 50,000 is the taxable supply. Got the clarity, my dear friends? Further referring to you, my dear friends, from here. Referring to now question number 7. Vivid Private Limited is engaged in supplying various services in Bangalore. It is registered in the state of Karnataka. It has furnished the following information for the month of June. First point, service provided by way of fumigation in a warehouse of agricultural produce, 13 lakhs. My dear friends, this entire 13 lakhs will attract GST because it's a taxable supply. It is a taxable supply. Further, point number 2, services of transportation of passengers by metered cabs provided through Webcast Limited, an electronic commerce operator, 5 lakh 40 is also taxable. Here it is taxable forward charge mechanism. It is taxable under the RCM mechanism. Namely, the e-commerce operator liable to pay GST not by the Vivid Private Limited, not by the forward charge. Is the RCM e-commerce operator liable to pay GST. Further, point number 3, 4 buses, each seating capacity 72 passengers, given on hire to state transport undertaking. Such buses run on a route and timing as decided by the state transport undertaking. So the entire 6 lakhs seating capacity is more than 12 numbers, given on rent on hire basis to state transport undertaking, specifically exempted. It is exempted. No one liable to pay GST. Further, goods transport service received from GTA for transporting the goods to be used in respect of the businesses given on hire to state transport undertaking. Tax on such service is payable 12%. GTA generally under RCM, but in the given case what happened? GTA is going to pay the tax. How can you say? Because 12% GST applicable, forward charge, GTA, supplier liable to pay GST, not by the recipient of Vivid Private Limited. Therefore, it is taxable under the FCM, forward charge mechanism, because 12% GST going to pay by goods transport agent, GTA. Recipient liable to pay GST, 5% will come. Here 12% is going to pay forward charge. Who is a supplier? Goods transport agent is a supplier. GTA is going to pay the tax 12%, not under the RCM, is a FCM. Whereas that is input service for the Vivid Private Limited can avail the ITC? No, because this service exclusively used for this service. This service what type of nature? Exempted supply. Therefore, GTA services received by Vivid Private Limited by payment of GST 12% not eligible to claim ITC, because that inward supply of service used for providing exempted output supply. Therefore, input has not allowed. In the given case, what is the solution? On 13 lakhs, 18%. On 13 lakhs, 18%. Because he given 18% is liable to pay GST by whom? By the Vivid. 2 lakh 34,000. 2 lakh 34,000 is the GST liable to pay by Vivid. The second one, taxable e-commerce supply liable to pay GST, not by Vivid. Thereafter, exempt supply. Thereafter, GTA liable to pay GST, not by the Vivid Private Limited. And that inward supply of GTA not qualify for ITC because it is using for exclusively exempt output supply of services. Therefore, tax liability payable by Vivid Private Limited for the given month is only 2,34,000 only. Got the clarity, my dear friends? Is a way in which one can able to examine in the examination. Question number 8. State with reasons whether GST is payable in the following independent cases. 1. Services provided to recognized sports body by as a curator of national team. 2. Service provided by way of transportation of passengers in metered cab. 3. Service by way of public convenience such as the provision of facilities of washrooms. 4. Service provided by a player to a franchise which is not a recognized sports body. They are asking us to identify whether taxable or exempted. The following points. GST payable or not. First case. If you take the first case, my dear sir, service provided to recognized sports body as curator. Who is he? Curator means what? A take care. A person who taking care of the things is a curator of a national team is exempted for his services? Absolutely not. Who are exempted? You being an individual as a player, umpire, coach, referee, team manager. If you provide the services to recognized sports body, then it is qualified from exemption. Exemption not given to curator. Exemption not given to selector. Exemption not given to commentator. Therefore, in the given case, it is well taxable. GST payable. GST is applicable. GST is payable on the given supply. Further, my dear friends, question number 2 here. Service provided by way of transportation of passenger meter cab. Services of metered cab absolutely qualify exemption. It is exempted. No one liable to pay GST. Question number 3 here. Subpart 3. Service by way of public convenience such as provisions of facilities of bathrooms, washrooms, lavatories absolutely exempted. Further, point number 4, service provided by a player to a franchise which is not a recognized sports body absolutely attract. Here GST payable. GST payable. It is not exempted. It is a taxable. Therefore, GST payable. Further referring to you, my dear friends. Question number 9. Mr. Dheeraj, a registered supplier of service in Bangalore, Karnataka state, has provided the following information for the month of February. Intrastate taxable supply of services 5,20,000. Legal fee paid to a lawyer located within the state 20,000. Rent paid to the state government for his office building 30,000. Received for services towards conduct of exam in Love All 16,000. Compute the net GST payable C GST, SGST or IGST as the case may be of Mr. Dheeraj for the month of February. Rate of C GST, SGST, IGST 9%, 9%, 18% respectively. All the amounts are given above or exclusive of taxes. Very simple problem, my dear sir. If you refer this intrastate taxable supply, the entire supply 5,20,000 is taxable intrastate. Therefore, on which CGST 9% and SGST 9% applies. On 5,20,000, 9% of GST. Namely, how much comes here? 46,800 CGST, 46,800 the SGST will apply. Legal fee paid to lawyer located in within the state. That means intrastate inward supply. This also here it's actually taxable under RCM. Who is the recipient? Dheeraj is the recipient, liable to pay GST. On rupees 20,000, CGST, SGST liable to pay under RCM GST by Dheeraj. Namely 9%. Namely 20,000 on which 9%. 1,800 CGST, 1,800 SGST liable to pay by Dheeraj, who is a recipient of the services from advocate, lawyer, therefore is under RCM. Recipient liable to pay GST. Further, point number here, rent paid to state government office building. Rent paid. Here also, this also will come under the RCM. Because the registered person, no, recipient registered person paid the rent for immovable property to government, in that case under RCM, recipient liable to pay GST. Here it is CGST, SGST will apply each 9% on rupees 30,000, namely 2,700 CGST, 2,700 SGST liable to pay by Dheeraj on the rent paid to his government, where it is being a recipient is a registered person, RCM will apply. Further, received services towards conduct of exam in Love All. So, conducting of an examination for recognized degree providing college absolutely exempted. So, in that context, it is considered as exempted supply, not liable to pay GST. 16,000 fully exempted. Let us see here how the question has been provided. Very simple. See, as I told you, see, on 5,20,000 CGST HGST forward charge. Thereafter, love luck, examination conducted for the college, it is degree, therefore exempted. Thereafter, RCM, legal fee paid to advocate, RCM on 20,000. Thereafter, rent paid to state government by registered person, being a theorist registered person recipient, liable to pay GST, 2,700 CGST, 2,700 HGST. Got the clarity, my dear friends? Referring to now, question number 10. Wellbeing Nursing Home has received the following amounts in the month of January in lieu of various services rendered by it in the same month. You are required to determine its GST liability from the details furnished below. First point, palliative care for terminally ill patients at patient's home. Palliative care is given to improve the quality of life of patients who have a series of life-threatening disease, but the goal of such care is not to cure the disease. Total 30 lakhs. Services provided by cord blood bank unit of the nursing home by way of preservation of stem cells, 24 lakhs. Hair transplant services, 100 lakhs. 4. Ambulance services to transport critically ill patients from various locations to nursing home, 12 lakhs. Transportation of patients in an ambulance on behalf of the state government against consideration, 10 lakhs. Naturopathy treatment. Such treatment is recognized system of medicine in terms of the section 2H of the Chemical Establishment Act, total 80 lakhs. Plastic surgery to restore autonomy of a child affected due to an accident, total 30 lakhs. Further, chronic healing treatment. Such treatment is not a recognized system of medicine in the terms of section 2H of the Clinical Establishment Act 2010, total 120 lakhs. Mortuary services, 10 lakhs. Note, all the amount given above are exclusive of the GST. Further, well-being nursing home is a registered person under the GST. Applicable rate of GST 18%. All transactions are at intrastate level. Very good. They are asking which is taxable, which is exempted. In this regard, my dear friends, if you refer here, palliative care is a healthcare service, though it may not be curable, is a healthcare services. Therefore, the entire 30 lakhs is here exempted. 30 lakhs is the exempted, my dear friends. Further referring to you here. Here, services provided by a cord blood bank. Sir, cord blood bank supply of services now became taxable services, sir. Not qualify exemption. Earlier was exempted, now taxable. Hair transplant will attract GST, taxable. Thereafter, ambulance services for transport of critically ill patients, entire the 12 lakh rupees is especially exempted, my dear friends. It is exempted supply. Further, transportation of patients in ambulance on behalf of the state government also be exempted supply. How exempted? It is exempted very clearly given. It is a what we can call the Article 243, Article 240W of the Constitution of India. Such services are rendered to the government. Absolutely, it is exempted. Further, naturopathy, absolutely exempt. They said recognized system of medicine. Therefore, it is also be exempt. Thereafter, plastic surgery to restore autonomy of child affected. That means what? It is purely exempted supply. It is a healthcare services. Therefore, exempt. Thereafter, pranic healing, which is not a recognized system of medicine. Therefore, well taxable. Mortuary services, supply excludes. Therefore, I can say that here it is supply excludes. Got the clarity, my dear friends? Only taxable here, how much? Taxable here is 1. 24 lakhs, 100 lakhs, therefore, and 120 lakhs. So 24 lakhs plus 100 lakhs plus 120 lakhs. How much comes here? 24 lakhs plus 100 lakhs plus 120 lakhs. Totally taxable supply 244 lakhs only is a taxable supply. 244 lakhs. See the answer here. 244 lakh is a taxable supply or intrastate supply. CGST 9%, SGST 9% will apply on that particular value. Further referring to, my dear friends, question number 11, time of supply. A machine has to be supplied at site. It is done by sourcing various components from vendors and assembling the machine at site. The details of the various events are as follows. 17 September, purchase order with advance of rupees 25,000 is received for goods worth rupees 10 lakh and entry duly made in the seller books of account. 20th October, the machine is assembled, tested at site and accepted by the buyer. 23rd October, invoice issued. 4th November, balance payment of 9,75,000 received. Determine the time of supply or supplies in the above scenario. Sir, in the given case, the question says supply of goods, forward charge applied. Time of supply should be the date of invoice or last date to issue invoice. In the given case, date of invoice or last date to issue invoice, whichever is earlier. Reason, advance payment not a time of supply for supply of goods. Here, this advance payment of rupees 25,000 cannot be called for time of supply. When the supply taken place, 20th October, when the buyer accepts the purchases, supply taken place, invoice should be issued on or before 20th October. But when they issue invoice, 23rd October. So, 23rd October or last day to issue invoice, 20th October, whichever is earlier. So, time of supply, TOS, is equal to 20th October is the time of supply for supply of goods, my dear friends. Further referring, question number 12. Determine the time of supply from the following particulars. 8th September, community hall booked for a marriage. Some agreed 1,20,000. Advance rupees 20,000 recorded in the books of account. 10th September, advance amount credited in the bank account. 2nd November, marriage held in community hall. 18th December, invoice issued for 1,20,000 indicating the balance of 1 lakh payable. 22nd December, balance of rupees 1 lakh recorded in the books of account. 24th December, payment 1 lakh credited to the bank account. So in this given case, what is the time of supply for supply of services? For supply of services, advance payment is stand whole good for time of supply. Here, out of rupees 1,20,000, advance of rupees 20,000 received on 8th September, the date on which the book entry made, and the bank made the payment, banker given the credit 10th September. So in the given case, 8th September or 10th September, book entry or bank entry, whichever is earlier, is 8th September. For rupees 20,000, advance payment is considered. Time of supply is equal to 8th September. For the balance amount of 1 lakh, where the event is completed when supply of services completed on 2nd November, marriage held in community hall. From the date 2nd November, within 30 days, invoice should be issued by supplier of service. When they issue invoice here, 18th December. So within 30 days, the invoice not issued. Therefore, the date of invoice we won't consider for time of supply, for supply of services. In that case, the payment received, balance amount when received, 1 lakh. 22nd December book entry, 24th December bank entry, whichever is earlier. 22nd December is the date of payment. Compare with the date of completion of supply of service. When the service completed, 2nd November or 22nd December, whichever is earlier. So the balance amount of 1 lakh rupee, time of supply for rupees 1 lakh balance amount, time of supply equal to 2nd November. Got the clarity, my dear friends? Further referring, question number 13. Certain goods are sent by Mr. X on sale on approval or return basis to Y on 22nd April 2023. The supply gets confirmed and invoice issued on case 1 20th August 2023, case 2 22nd November 2023. Payment in each of the cases is made on 23rd November 2023. Determine the time of supply. Sir, the goods sent on seller approval basis on 22nd April 2023 is not time of supply. When the buyer confirms that particular purchases, in that case, that is the time of supply. By the time on or before that date should be issue the invoice. When they issue the invoice taking place here, case 1 20th August 2023. What is the last date to issue the invoice for the buyer, for the seller is considered, means there are 6 months time period is there from the date of dispatch. From the date of dispatch for a period of 6 months. That means up to 21st October 2023 time period is there. Within the time period, if the buyer accepts, issue the invoice, or if buyer not accepted, if you not issue the invoice, the goods not returned back to you, in that case last day to issue invoice is 21st October 2023. That is 6 months ends. In that case, if invoice issued before that 21st October 2023 is a time of supply. If the invoice issued after the expiry of 21st October 2023, the last day to issue invoice is 21st October 2023 is the time of supply. When the invoice issued in the given case here, invoice issued when 20th October, 20th August, first case 20th August. In that case, on or before 21st October. Therefore, time of supply is in the given case is 20th August. In the given case of case 2, invoice issued 22nd November. Last day to issue invoice is 21st October. Therefore, in the given case, time of supply goes to 21st October 2023. Now referring to you, question number 14. Raman Rao, a registered supplier under the GST in Mumbai, is directed by Neuro Enterprises, Kolkata to deliver the goods valued at 12 lakhs to Fabricana of Aurangabad in Maharashtra. Raman Rao makes out an invoice at 9% of tax rate under the CGST and SGST respectively scheduled rate and delivered it locally in Maharashtra. Discuss and comment on the above levy of tax and determine the tax liability of the goods in the above circumstances. Dear friends, here it is place of supply. Place of supply is as per section 10 subsection 1 clause B of IGST Act, where place of supply is equal to place of business of the third party. Here Raman Rao is a seller of the goods and the buyer here is Neuro Enterprise buyer, Kolkata. Upon the Neuro Enterprise directions, Raman Rao sent that goods to a place of Fabricana, Aurangabad. Goods sent to Fabricana, Aurangabad in Maharashtra. Meaning thereby, here, upon the direction of a third person, means Neuro Enterprise, goods sent by Raman Rao to Fabricana of Aurangabad. In that case, my dear friends, it is the place of supply for Raman Rao is the Neuro Enterprise, Kolkata. That means liable to pay IGST. Place of supply here is the Kolkata. IGST will be levied. But Raman Rao by mistakenly applied CGST 9%, SGST 9% on 12 lakhs. Therefore, liable to pay IGST, which is on 12 lakhs at the rate of 18% on 12 lakh, 18% is equal to 2 lakh 16,000 liable to pay IGST. Now, already paid sir wrongly CGST, SGST. Ask for refund and pay off the correct amount of IGST 2,16,000 is the approach of Raman Rao should be. Is clear, my dear friends? Further referring to you. Question number 15. Mr. Mahendra Goyal, an interior decorator, provides professional services to Mr. Harish Jain in relation to two of his immovable properties. Determine the place of supply in the transactions below as per the provisions of the GST law in the following independent situations. Place of supply. Case 1. Location of supplier Mahindra Goyal, Delhi. Location of recipient Mr. Harish Jain, Mumbai. Property situated in New York, USA. So in the given case, what is the place of supply means if the property located outside India, the place of supply goes to location of the recipient. Therefore, here Mumbai. Location of supplier Delhi. Place of supply goes to Mumbai. It is a IGST transaction, interstate supply. Second case, location of supplier Delhi. Location of Harish Jain, recipient New York. Property situated Paris. Here, where the property is located is a place of supply. Place of supply is equal to Paris. Because here section 12 series, here section 13 series applicable. That is the main reason. As per section 12, subsection 3, class A, property where located is a place of supply. If it is directly relating to immovable property, if the property outside India, if the place of supply goes to location of the recipient. On the other hand, if the location of supplier in India, recipient of service outside India, or vice versa. In that case, section 13, subsection 4 says that where the property is located or intended to be located globally. In that case, location of supplier Delhi, recipient is from New York. In that case, section 13, subsection 4 of IGST apply, which says that place supply goes to the property where located. Where located? Paris. In that case, Paris is the place supply. Location of supplier Delhi. It is nothing but a interstate supply. Further, my dear friends, question number 16, referring as follows. Mr. Jimpal, a supplier registered in Hyderabad, Telangana, sold goods to Mr. Not Known unregistered person on 1st January 24 without movement of goods and issued tax invoice. Find the place of supply in the following independent cases. My dear friends, in the given case, we have a new section, section 10, subsection 1, class CA of IGST Act, where if the goods involved, supply involves movement of the goods or supply does not involve movement of the goods, as the case may be, if the transaction is B to C, supply to unregistered person, place of supply is equal to the address of the recipient. If the address of the recipient not available, the state name of the recipient available is deemed to be address of the recipient. If address of the recipient not available, recipient state code also not available, in that case, place of supply goes to location of supplier. A new provision it is. Here, case 1. Mr. Not Known belongs to Tamil Nadu and the same mentioned in the tax invoice. Then place supply first case is Tamil Nadu. Place supply first case is Tamil Nadu. First case. Case 2. What is the place supply? In case Mr. Not Known belongs to Telangana and the same mentioned in the tax invoice. State name is in that case is a Telangana. Place supply Telangana. Then case number 3. If Not Known belongs to Not Known state and not mentioned in the tax invoice, in that case, location of supplier Jimpal from where? From Telangana. That is, place of supply is location of supplier, namely Telangana. Got the clarity, my dear friends? As simple as this. Referring now, question number 17. From value of supply. RG Private Limited provides the following particulars relating to the goods sold by it to GK Private Limited. Particulars amount in rupees. List price of the goods exclusive of the tax discount 10 lakhs. Tax levied by municipal authority in the sale of such goods 1 lakh. CGST and HGST chargeable on the goods 2,880. Packing charges not included in the price above 20,000. RG Private Limited received rupees 40 as a subsidy from NGO on sale of such goods. The price of rupees 10 lakh of goods is after considering such subsidy. RG Limited offers 2% discount on the list price of the goods which is recorded on the invoice for the goods. Determine the value of taxable supply made by RG Private Limited. How to understand this? Very simple. Valuation supply. Value of supply, how much? Taxable supply. Namely transaction value. 10 lakhs addable. 10 lakhs is addable. Why 10 lakhs addable? Because this 10 lakhs is nothing but what? The list price. Therefore, you have to add the 10 lakhs in the value of supply, followed by taxes and duties should be added except GST taxes. As you are aware of that, except GST taxes, all tax duties should be added. 1 lakh should be added in the value of supply. Thereafter, GST taxes should not be added, as you are aware of that, in the value of supply. Packing charges should be added, rupees 20,000. Subsidy from other than government should be added. It is NGO, not a government. Therefore, 40,000 should be added. And the giving discount of 2% at the time of sale price, in that case, allow to discount direct unless it is given after supply. So at the time of supply, they give the discount 2%. 2% on sale price of list price of 10 lakhs. Namely, it comes rupees hardly 20,000. Discount deduct. Then you find out here 10 lakhs plus 1 lakh taxes 20,000 is nothing but packing charges 40,000 nothing but subsidy. Deduct from that 20,000 is the discount. So the value of taxable supply here is 11 lakh 40,000. On 11 lakh 40,000 pay the GST. 11 lakh 40,000. On that you have to pay the GST. Is the value of taxable supply. 11 lakh 40,000 in the given case. Further, my dear friends, referring to you now, question number 18. A principal supplies the groundnut to his agent and the agent is supplying the groundnut of like kind and quality in subsequent supply at a price of 5,000 per quintal on the day of supply. Another independent supplier is supplying the groundnut of like kind and quality to the said agent at the price of 4,550 per quintal. Find the value of taxable supply in the hands of the principal as per the rule number 29 capital A of the rule number 29 small a of the CGST rules. How to understand this? Very simple, my dear friends. Valuation rules it is. So the principal to agent at what price is supplying? At rupees 5,000. And the open market value of the product is 4,550. In that case, on the 5,000, apply at the rate of 90%, which is rupees 4,500. 4,500 or open market value, whichever is less, generally will considered as the value of supply by the principal. So in the hands of the principal, the value of taxable supply is rupees 4,500. As simple as this, my dear friends. Question number 19. Compute the cost of production and valuation for the under mentioned product as per the rule number 30 of the CGST rules. Cost of material inclusive of the CGST 12% is 1,12,000. Direct wages 47,000. Other direct material 13,500. Computer used for office purpose 41,000. Quality control test incurred for production process 17,000. Engineering charges paid for installation of the machinery 12,750. Other factory overheads is equal to 27,000. Salary of the staff appointed for office duty 84,000. Sale of the scrap realized 1,800. The actual profit margin is 15%. Administrative overhead 100% related to administrative cost 1 lakh. Selling distribution expenditure 30,000. So very simple, my dear. Is an examination question. CMA Inter already appeared long back. Now this is going to come in the examination. So very important. How to identify the value as per the rule number 30 means cost of production plus 10% on the cost of production is the value of supply. Here, abnormal expenditure should not be considered. Office expenditure should not be considered. In that case, how to know the value of the product? Very simple. Exclusive of GST only have to take from this. So, from this, if I apply 100% divided by 100 plus GST, what is going to come? 1 lakh will come. Is the value of supply. Should not be considered inclusive of GST. Then add direct wages, factory overhead, add Other material 13,500 you can add. Thereafter, computer used for office purpose should not be added. Quality control should add 17,000. Thereafter, engineering charges paid for installation of machinery. My dear friends, very technical point it is. It is a going to add along with the cost of the machine, capitalize, and whose depreciation only should add here. It should not be added in the given case. Further, other factory overhead absolutely add how much? 27,000. Thereafter, salaries staff paid to office duty should not be considered. Sale of scrap should be deductive from the cost of production. Profit margin irrespective, we have to take only at the rate of 10% only on the cost of production. So, administrative overhead 100% into administrative cost. Therefore, administrative overhead should not be considered. Thereafter, selling distribution should not be considered. What we want? Cost of production for capital consumption. Therefore, in the given case, what is my cost of production for capital consumption? Is 1 lakh plus 47,000 plus 13,500 plus 17,000 plus 27,000. From that, deduct 1,800 scrap. You got 2 lakh 2,700 is a cost of production on which you apply 10% on the 2 lakh 2,700. Therefore, 20,270. So, in that case, my dear friends, is how much you are going to get there? You get here 2 lakh 2,700 into 10% is equal to 2 lakh 22,970. 970 is the value of supply for the given case, my dear sir. You have to pay the GST on such value. 2,22,000. See here, 2,22,970 is the solution. Is available readily. Just look and confirm. 2,22,970 is the solution. Is the example problem? One can expect the examination. Please go through it. Rafi, now question number 20. Prada Forex Private Limited, registered in Delhi, is a money changer. It has undertaken the following purchase and sale of foreign currency. $1,000 are purchased from Nandi Enterprises at the rate of 68 rupees per US dollar. RBI reference rate for US dollar on that day is 68 rupee 60 paise. Point number 2. $2,000 are sold at to Minawati at the rate of 67 rupee 50 paise per US dollar. RBI reference rate for US dollar for the day is not available. Determine the value of supply in each of the following cases in terms of rule number 32 sub number 2 class A of the CGST rules. Second point, rule number 32 sub number 2 class B of the CGST rules. My dear friends, here memory recall required. Rule number 32 sub number 2 class A, what it says, you know sir, in the given case we have two questions to answer. One is point number small point 1, other one small point 2. Two questions to answer. If there is actual exchange rate and RBI rate is given, you identify the difference. How much here? 68 rupees and 68 rupee 60 paise. Difference is 60 paise. That you multiply with the foreign currency USD. Which comes rupees 1000 into 60 paise is equal to 600 rupees is the value of supply in the point number 1. Point number 2, when you go here, they said $2,000 has been exchanged at the rate of 67 rupee 50 paise, but RBI reference rate not available. In that case, what you do is you multiply the entry value 68 rupees 60 paise multiply with what? Here 68 rupee 60 paise multiply with entire value of USD $2,000. Total 68 60 paise multiply with $2,000, which is equal to 1,37,200. In that case, my dear friends, the law of the land here says that from the 2,37,000, I will read it here. 2,37,200. Here you have to apply 1% from the rule we got. At the rate of 1% is the value of supply. How much comes? Say 1,300 750, sorry, 1,372 only will come. Yes, because 1% only, 1% is equal to 1,372. So the value of supply in the given case, first case, in a case, rule number 32 sub number 2 class A says 600 answer. Second one is 1,372 is the value. 1% from where you got in the 1% here? This 1% I got from rule number 32 sub number 2 class A. Get the clarity? Then coming to rule number 32 sub number 2 class B, which says in the case of first case, here what is the given value? $1,000 at the rate of 68 rupees actual exchange rate. Therefore here 68 rupees into $1,000 total equal to rupees 68,000. Up to 1 lakh, 1% is equal to value of supply as per rule number 32 sub number 2 class B. Beyond 1 lakh but not exceeding 10 lakhs, in that range 0.5% of the value is equal to value of taxable supply. Beyond 10 lakhs of value, over and above 10 lakhs, on that apply 0.1% is the value of supply. Minimum value 250 rupees per transaction, maximum value 60,000 rupees per transaction. So in the given case, if you apply here, my dear sir, on 68,000 at the rate of 1%, which is 680 or rupees 250 minimum value, whichever is higher. Which is higher here? 680. So in the given case, point number 1 is this 680 is the value of supply in the case of rule number 32 sub number 2 class B. Further, sir, if it is more than 1 lakh, up to 10 lakhs, 0.5%. Beyond 10 lakhs, 0.1%. Minimum value 250 rupees, maximum value 60,000 per transaction. In the given case, my dear sir, how to understand here? I will refer to you in a simplified manner. See, here how many dollars? Second case, 2,000. Second case I am talking about. 2,000 US dollars. Multiply with the actual exchange rate, 67 rupee 50 paise. Then total value how much comes? Say $2 lakh into 67 rupee 50 paise is equal to 1,35,000 comes. So up to 1 lakh, in 1,35,000 up to 1 lakh, 1% is equal to, I will present here 1,35,000 by forget 1% up to 1 lakh, over and above 1 lakh, 0.5%. How much here coming? On 35,000. So 1% equal to here 1,000. Here how much comes? Say on 35,000, 0.5% is equal to 175. So this total is equal to 1,175 is the value in the given point number 2. B point number 2 is the 1,135. Got the clarity, my dear friends? Further referring to you, my dear sir, question number 21 from input task kit chapter. Compute the input task kit available with MS Motors Limited, manufacturer of cars, in respect of the following services availed by it in the month of October 2023. 1. Accounting auditing services 17,200 rupees. Health insurance services for employees. Services are not provided under the government obligation 6,200. Further, routine maintenance of the car manufactured by MS Motors 28,000. Repair services for office building, cost of repair is charged to profit and loss account 28,400. Hotel accommodation and conveyance facilities to employees on vacation 13,360. Testing service availed for car engines 19,000. Very good question it is. One can expect in the examination, my dear sir. Accounting auditing services well eligible to claim ITC. Here ITC well allowed 17,200 ITC allowed. Further, my dear friends, health insurance services for employees which is blocked credit ITC not allowed. Reason, it is not an obligation for the employer to provide to the employee. That's why. Further, routine maintenance of the car manufactured by MS Motor. Of course, for the manufacture of motor vehicle, for manufacture servicing services, well eligible to claim ITC. So, 28 rupees ITC allowed. Thereafter, repair services for office building. Generally, works contract in relation to an immovable property, ITC is not allowed. However, if it is not capitalized to the asset, in that case, repairs and maintenance, which is nothing but a input service nature, which is not an immovable property for capitalizing. In that case, the problem very clearly says that the repairs and maintenance of the office building, that expenditure debited to profit loss account. In that case, IT is allowed. If it is capitalized expenditure along with the office building, ITC is not allowed. In the given case, 28,400 rupees ITC well allowed. Further, my dear friends, the hotel accommodation and conveyance facility to employees on vacation is a blocked credit. Here, ITC not allowed. No ITC. Thereafter, testing service availed for car engines, servicing services well allowed ITC for a manufacture of the vehicles. ITC allowed. Therefore, total amount of ITC allowed here how much means? Here, one is 17,200, thereafter 28,000, thereafter 28,400, thereafter 19,000. Total amount how much comes? 17,200 plus 28,000 plus 28,400 plus 19,000, which is 92,600. ITC well allowed is the same answer given in the material also. Further referring to, my dear friends, further referring here, question number 22. Compute the amount of input tax kit admissible to Sonam Limited in respect of the various input purchased during the month of September 2023. Goods purchased without invoice 75,000. Goods purchased from Akhil Limited, full payment is made by Sonam Limited to Akhil Limited against such supply, but tax has not been deposited by Akhil Limited. Purchase of the goods not to be used for business purpose 38,000 rupees. Purchase of the goods from Komal Limited. Invoice of Komal Limited is received in the month of September 2022, but goods were received in the month of October 2023. Goods purchased against valid invoice from Vikram Limited. Sonam Limited has made payment to Vikram Limited for such purchases in the month of October 2023. How to understand this? Very simple, sir. If the goods purchase invoice not available, ITC on that not allowed. No ITC for rupees 75,000. Goods purchased from Akhil Limited, full payment made, but Akhil Limited not deposited the amount to department. Supplier not paid to department the tax, but for supplier to pay the tax to department, time limit is there up to the next year, up to 30th September of the succeeding financial year. In the given September 2023, for the given month, I purchased the goods, I have received the goods, I received the invoices, I made the payment to my supplier. I can avail the ITC. When I should reverse the ITC means only when by next year 30th September supplier not paid the tax to department, then by 30th November of the next year only I have to reverse the credit, not now. Therefore, this ITC qualifies 2,20,000 ITC allowed in the month of September 2023. No doubt about that. Further, purchase of the goods not to be used for business purpose. Of course, Here no ITC for the given case. Thereafter, goods purchased from Komal Limited, invoice of Komal Limited is received in the month of September 2022. Okay, in the month of September 2022 received, but goods were received in the month of October 2023. That means in the month of September 23, goods not received, therefore ITC in the month of September 23 not allowed. Of course, October 2023, this amount may be going to allow ITC, but we are computing the input tax credit for the month of September. Therefore, for the time being not allowed. No ITC in the month of September. Goods purchased against valid invoice from Vikram Limited. Sonam Limited has made payment to Vikram Limited for such purchase in the month of October 2023. So, goods purchased against valid invoice from Vikram Limited. Okay, payment is made to Vikram Limited October 2023. So what? September month I can get the credit or not? Because for the recipient to make the payment to supplier, there is 180 days time is there from the date of invoice. So in the month of September I purchased, next month I made the payment, in the month of September can I avail the ITC? Yes, 38,000 ITC allowed. Don't get confused, my dear friends. There is a small change in the answer which required to correction. So the right amount here is the ITC allowed 2,20,000 plus 38,000. Totally 2,58,000 ITC allowed. Don't get worried. Answer may be differ in the given study material. There is a slight correction required because this 2,20,000 ITC well allowed in the month of September 2023, because if the supplier not paid the tax to department next year 30th September 2024, that time only I have to reverse being a recipient my credit by 30th November of the 2024, but September 2023 I can avail the ITC. Further, my dear friends, refer to now question number 23. Reading as follows. W Limited, a registered supplier, is engaged in the manufacture of tanks. The company provides the following information pertaining to the GST paid on the purchase made or input services availed by it during the month of January 2024. Purchase of the machinery where debited to debit note is issued, 2,15,000 GST paid. Input purchase was directly delivered to X, a job worker and a registered supplier, namely 1 lakh. Computer purchase depreciation was claimed on the said GST portion under the Income Tax Act 1961 5,000. Works contract service availed for construction of staff quarters within the company premises, GST paid 2,25,000. Determine the amount of ITC available to the company for the month of January 2024. Subject to the information given above, all the conditions necessary for availing ITC have been fulfilled. Very simple problem, sir. Machinery purchase by paying the GST, how much? 2,15,000. ITC allowed. Inputs purchase directly delivered to the job worker, ITC allowed. When allowed? The date on which the job worker receives the goods is deemed to be received by the buyer, so ITC allowed. ITC allowed in the month of January. Further, computer purchase depreciation was claimed on the said GST portion. Inclusive of GST, you claim the depreciation, ITC not allowed. Works contract service is a blocked credit. Therefore, here also ITC not allowed. Then how much allowed here? ITC means 1. ITC 2,15,000 allowed. Thereafter 1 lakh is allowed. Totally 3,15,000. 3,15,000 total ITC allowed in the given case, my dear friends. 3,15,000 ITC allowed. Further referring to you for kind consideration. Further referring question number 24. X Private Limited, a registered supplier, is engaged in the manufacture of taxable goods. The company provides the following information of the GST paid on the purchases made or input services availed by it during the month of September 2023. Purchase of the caps used for transportation of its employees 1 lakh GST paid. Inputs consisting of 4 lots, out of which second lot was received during the month on which GST 2 lakh 25 rupees paid. Capital goods, out of 3 items, invoice for 1 item was missing and the GST paid on that item was rupees 50,000. Total amount is 2,50,000. Outdoor catering service availed for Women's Day 72,000 rupees. Determine the input tax credit available to X Private Limited for the month of September 2023. All the conditions necessary for availing the input tax credit has been fulfilled. Very, very simple. Is it more about block credit concept? In the given case, my dear sir, if you refer goods purchase, namely caps, cap means vehicle, the seating capacity, of course, not exceeding 13% including driver. Therefore, ITC of this block credit, ITC not allowed on such caps. Further, inputs consisting of 4 lots. The second lot, what this is now, lot by lot, part by part, installment by installment goods are receiving, lot by lot goods are receiving. You have to avail the ITC fully only when the last lot received. Therefore, this entire 2,25,000 rupees for the time being, ITC not allowed. Further, capital goods is 2,50,000 rupees GST paid, out of which 50,000 worth of the GST paid invoice missing. In that case, 2,50,000 minus 50,000 because invoice is must. Therefore, balance amount here is 2 lakhs. ITC allowed for 2 lakhs. So, further, outdoor catering services availed for Women's Day is a block credit. Here, no ITC. So, only allowed ITC here is only 2 lakhs. Further, my dear friends, question number 25, reading as follows. BA Private Limited purchased the machinery worth rupees 10 lakhs exclusive of GST on 20th July 2023, on which it paid GST 18% and availed ITC on further. On 5th March 2024, it sold the machine for rupees 8 lakhs excluding of GST to HA Private Limited. This GST rate on sale is 18%. What will be the course of action for BA Private Limited to follow under the CGST Act? Very simple. If the capital goods purchased by you and used for your production purpose quite for some time and selling that subsequently after having the ITC, then you have to reverse the ITC or pay the amount to department. How to compute that amount? Very simple. When they purchase the asset, they purchase on 20th July 2023. So when they sold the asset on 5th March 2024. So how many quarters? Part of the quarter, full quarter. July, August, September 2023, 1 quarter. October, November, December, 1 quarter in 2023. Then January, February, March 2024, 1 quarter. There are 3 quarters. Part of the quarter, full quarter. Therefore, for per quarter, there are 3 quarters at the rate of 5% per quarter. Namely, 15% straight away reduction from the input tax availed on such asset. How much availed asset on 10 lakhs? 18% GST. Therefore, ITC already availed by you is 1,80,000. From that deduct how much percentage? 15%. On 1,80,000, 15% is equal to 27,000. Deduct 27,000 from 1,80,000. Then you will get a amount of 1,53,000 of GST availed ITC. That you compare with GST payable on sale. Sale how much? 8 lakh. On which GST 18% is equal to, on 8 lakh 18% equal to 1,44,000. Among the two, this or this, whichever is higher. The higher amount here is, therefore higher amount is 1,53,000. That much of amount you have to pay to department or reverse the credit. In the case of you dispose the capital asset after using for your taxable supply and disposing of now as second hand machinery. In that case is the process. Further referring to my defense, question number 26. Mrs. VMA, a registered taxable person under the regular scheme provides the following information in respect of the supplies made by it during the month of April 2023. Interstate supply of goods 2 lakhs, intrastate supply of 1000 packets of detergent at the rate of 400 rupees each, along with a plastic bucket with 100 rupees each, with each packet being a mixing supply. Rate of GST for detergent 18%, for the plastic bucket 28%. Further, supply of online education journals to XYZ, a private coaching center, provides tuitions to students of class 10th, 11th and 12th, being intrastate supply 1 lakh. VMA has also received the following inward supplies: interstate supply of goods, out of which invoice for goods worth rupees 40,000 is missing and no other tax paying document is available. Total 1,40,000 is the GST, is the inward supply. Further, repairing of bus with seating capacity of 20 persons used to transport its employees from their residence, being intrastate supply 1 lakh. Details of the opening balance of the ITC as on 1st April 2023 are as follows: CGST, HGST, IGST 10,000, 10,000, 80,000 respectively. Find the following additional information is provided. Rate of GST in respect of all inward and outward supplies except item number 2 above is 18%. That is CGST, HGST 9% each, IGST 18%. All the figures mentioned above are exclusive of the taxes. All the conditions for supplying, namely availing the ITC, have been fulfilled except specifically given, and VMA is not eligible for any threshold exemption. Compute the minimum net GST payable in cash by VMA for the month of April 2023. The key point here is the minimum net GST payable in cash. That is important. No problem. First and foremost, we identify what is our output tax. See here, output tax. Output tax in the name of CGST, SGST, IGST. So, like that we have 3 stages output tax. Here, interstate supply of goods. Interstate means IGST at the rate of 18%. 18% is on what? On rupees 2 lakhs. So, IGST payable here is 36,000 on 2 lakh, 18%, my dear. IGST 36,000 IGST output tax. First case over. Second case, intrastate supply, mixing supply. There are 2 rates, 18% and 20%. Highest rate 28% will apply for the inter supply. What is inter supply? Inter supply 400 rupees each plastic bucket, a plastic bucket worth rupees 100 each with a packet. Therefore 100 plus 400 together 500 into 1000 packets is equal to 5 lakhs, on which 20% no, highest rate 20%. Therefore 14% CGST, 14% SGST. Namely on rupees 5 lakhs into 14%, which is CGST. Here 70,000, SGST rupees 70,000, because highest rate you have to take in the case of mixed supply. Among the supplies, highest rate 28% will apply for the entire supply. Further, my dear friends, supply of online education journals to XYZ private institution is a taxable supply, which is interstate supply. How much here? 1 lakh rupee supply of services. What rate applicable? 9% CGST, 9% SGST, which is here 9,000 CGST, 9,000 SGST and output supply of services. Now we got the clarity. So what is the total supply here? Our total supply here is 1. Here is comes here. How much comes? No, my dear friends. Here output supply is 79,000 and 79,000 and 36,000. So we got output supply here. I will write here also 79,000 CGST, 79,000 SGST, IGST rupees 36,000. Got the clarity, my dear? Any difficulty in the given case? So is output tax in the name of CGST, SGST, IGST, output tax. Now coming to input tax, credit. Here they said, also receive the following supplies: interstate supply of goods, out of which invoice for the goods rupees 40,000 is missing, and no other tax paying document available. Therefore, out of this 1,40,000, you qualify for only 1 lakh input tax credit, which is interstate supply of goods they procured. Therefore, 18% IGST, which is 18,000. So here I will say that the ITC for the month is in the name of CGST, SGST, IGST. IGST here I got rupees 18,000 because 1,40,000 minus 40,000 rupees worth of the goods for which no invoice. They have eliminate that, the credit not allowed. Balance 1 lakh, and 1 lakh 18%, 18,000. Further, renting of bus with seating capacity 20 passengers means more than 30 passengers. Therefore, ITC qualify for the given one. How much here it is given? 1 lakh. What type of supply it is? Intrastate supply. Therefore, CGST, SGST 9,000 and 9,000. How got 9,000? 9% of 1 lakh. 9% of 1 lakh. Further, opening balance they given. Opening balance they given CGST, SGST, IGST. Therefore, opening balance. I will say that here, opening balance. How much CGST? 10,000. SGST 10,000. IGST 80,000. So total credit we got. Total credit here 19,000 CGST, 19,000 SGST, 98,000 of IGST we got, my dear. Is it clear? Having this, we have to approach minimum net GST payable. How can we go minimum GST payable? I will take up here a small sheet of paper and I will be present here for your kind consideration. Here. So my output tax, as aware of that, CGST, SGST, IGST, all are in rupees. How much we got here? The output tax liability, look here, 79,000 CGST, 79,000 SGST, 36,000 of IGST. Output tax it is. Therefore, here 79,000 and 36,000 minus input tax credit. Input tax credit, first you have to take first step IGST credit. As I told you in many times in the class also, first IGST should be fully pay off credit. Thereafter only you have to go to the CGST, SGST credit. So IGST credit, how much is there available in our books with the opening balance? We got it here 98,000. So 98,000 is there with me. 98,000. First set off against IGST payable. So IGST become fully nil. Then 36,000 reduce. From the 98,000, if you reduce 36,000, you got 62,000 still excess balance of IGST. That you set off against CGST and SGST. What proportionate means? You have to identify now what is my CGST credit, what is my SGST credit. If you refer the CGST credit, how much here is there? 19,000. SGST credit is there 19,000. So in that case, no problem. In that case, I can go equally also to bifurcate the excess credit of rupees 62,000. You get my point, sir? So in that case, if I divide by 2, how much comes? 31,000. CGST I can claim, against SGST I can claim 31,000. Still I have to pay the CGST. 79,000 minus 31,000, 48,000. Thereafter 79,000 minus 31,000, 48,000. CGST I will have to pay. Now I am going to claim CGST credit against CGST payment. How much? 90,000. SGST credit I can claim against my SGST payment, which is 19,000. In that case, the balance how much is there here, which is 29,000. 29,000 CGST, 29,000 SGST have to pay by electronic cash ledger. As simple as this, my dear friends.